please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello, good morning, and a very, very proud moment for all of us at CNBC TV 18. In the Mumbai News Center, I'm Mangla Malu. With me is Anisha Jain. Anisha, wish you and all our viewers a very, very happy birthday. You know, CNBC TV 18 turns 18 in the world of business news, in a world of many firsts. We're the first channel to attain adulthood, and that is important, right? A channel that we grew up with grows up. It's a moment of pride, happiness, and a lot of gratitude to all of you for watching us and supporting us all through these 18 years. Morning, Anisha.
Well, certainly it's a very proud moment for you and me to be part of this CNBC TV 18 family for the last 2 or 3 years. Let's hope there are many, many more years to come for CNBC TV 18 family and for us being here. But before we put on the party shoes and get into the celebration mode, let's talk about business.
Let's take a look at the Asian markets. They seem to not be celebrating the 18th birthday of CNBC TV 18, given the weak cues that came in overnight from Wall Street. The Wall Street reversed those gains. So if you take a look at the Nikkei, that one's down about 0.5% when I last checked. That one should come up for you. Apart from that, we are seeing some bit of strengthening on the dollar yen as well. The Korean index, that one is led lower by close to 27% cut on Samsung Electricals. They are planning a rights issue, so that one weighing in on the Korean index. Apart from that, we have the Taiwanese as well as the Straits indices. Both of them should come up for you as we speak, and no difference there as well, a 0.5% cut on each of these indices. What does this mean for our markets? Yesterday we had a choppy terrain. We recovered a little in the last hour of trade, closed narrowly in the red, but the SGX Nifty indicates a 20-point downtake as we open.
Okay, so choppy start as far as Asia is concerned, but it was choppy yesterday in US as well because the equities there closed lower. The S&P 500 declined by around 0.4%, posting its first 3-day losing streak since August. The Dow finished 110 points lower, while the Nasdaq erased early gains to end marginally in the red. CNBC's Josh Lipton gets us a wrap of all the action on Wall Street.
U.S. equities closing lower on Tuesday as a rebound in tech stocks failed to lift the broader market higher. The Dow fell 109 points. The S&P 500 declined 10. The information technology sector was the only advancing sector. Meanwhile, the Nasdaq slipped 13 points. Tech has taken a hit recently, sliding about 4% over the past week. That's as investors digest a major tax bill passed by the U.S. Senate. Financials, meanwhile, are up more than 3% over the past week. In theory, the proposed changes would help banks and financials more than tech companies since they currently pay a higher effective tax rate. In corporate news, McDonald's finished higher after Jefferies upgraded it to buy from hold. In a note to clients, they said McDonald's use of data and technology should attract a higher multiple over time while leading to higher returns. On the other hand, Toll Brothers reporting weaker than forecast earnings and sales, pushing its stock lower. Toll said it experienced the slowest orders growth in 6 quarters. And finally, in economic news, the U.S. Commerce Department saying the trade gap widened 9% to $48.7 billion. That was the highest level since January. Economists polled by Reuters had forecast the trade deficit widening to $47.5 billion.
All right, but the tax bill, that one continued to be top of the mind. Meanwhile, opponents of the Republican tax plan protested on Capitol Hill, demanding that the Republican lawmakers who actually voted for those tax cuts and jobs hear their concerns about the legislation. Hundreds of protesters shouted, and I quote, "Kill the bill and tax the rich, not the sick." CNBC's Elin Mui, she reports.
Democrats have been protesting across Capitol Hill to try to stop the GOP tax bill as it goes into final negotiations. We saw Democratic protesters just outside of Representative Barbara Comstock's office. She represents Virginia and is seen as a crucial vote here. They were shouting, "Tax the rich, not the sick," and "Kill this bill, don't kill us." We saw several people getting arrested. One woman was literally lying supine as Capitol Police carried her away. They sat down in the hallways to try to block people from going in and out of the offices, as well as from going through the hallways. So this just gives you a sense of how Democrats are trying to to marshal some energy here to block the tax bill in its final days. It seems like Republicans will be able to do this without Democratic support, but Democrats are hoping that this is going to be a win-win for them no matter what. If the bill doesn't pass, that's a win for them. If it does pass, they say that because this bill is regressive and because it could actually raise taxes on some middle-class voters, that will come back to backfire on Republicans come 2018.
Okay, let's also get in some opinion from Goldman Sachs and JP Morgan on what could be the impact of the mega tax overhaul on the US economy.
Our expectation would be that it boosts growth in 2018 and 2019 by about 0.3 of a percentage point, and obviously it depends on what ultimately gets finalized. It's a little bigger than what we had been assuming previously, because ultimately the individual rate cuts and the pass-through income, as well as the lower corporate tax rate, are just a bit more voluminous than what we've been building in a few months ago.
For the economy, we do expect this to boost GDP going forward, but still it is almost a sort of stoking of the fire, right? The U.S. economy is in late cycle. Tax reform can help, certainly can help certain parts of the stock market perform well, as we've seen certain companies perform very well yesterday. But for the economy, we still do expect this to be a time when recession risks are somewhat rising, not in the next 12 months, but certainly in the next 2 to 4 years. Some of those recession risks, as we see them, wage growth increasing, inflation increasing, and then soon to be consumer spending that would fall. Of course, that's in the longer term, but the tax reform can help, but it certainly can't stave off the ending of an economic cycle.
All right, then let's take a flight across the Atlantic. In the European region, the markets closed with a tinge of red, 0.25% cut seen on the French index, and this loss came in as investors digested the news surrounding Brexit talks. And on the data front, we also got the Eurozone composite PMI, which surged to 57.5 versus 56 in October. That's the highest monthly reading in more than 6.5 years. But despite that, we saw a tinge of red. Across the periphery, there was mild moves seen there, but two indices that really stand out on the lower end. We have the Ukrainian markets, which are down about 2.5% in 2 consecutive sessions, and the Greek ATHEX, which was down about 1.5% after losing 1% in the previous trading session as well. So weakness seen in both the ATHEX as well as the Ukrainian index. The emerging markets back. We saw some moves, or day before yesterday, the Brazilian index was up about 1%, but that one just flattered to deceive, down about 0.75% in yesterday's session.
Okay, let's shift focus to the currency space then. The dollar strengthened versus a basket of major currencies as investors track developments in Washington, where US lawmakers are attempting to pass a tax reform bill.
In the world of commodities, oil prices steady. The market mulls its latest US industry weekly inventory estimates and monitors geopolitical risks.
And from the precious metal space, gold prices near 2-month low as the dollar rose against a basket of currencies and focus shifts to the US tax overhaul legislation. Well, back home on Dalal Street, the market recovers in the last hour but ended in the red. Nifty manages to hold on to 10,100 mark. The Nifty Bank actually outperformed yesterday, led by the PSU banks. The mid-caps too managed to close in the green. But how the Qs stacked up for this special day? Naveen joins us now with more. Naveen, good morning. A happy 18th birthday to CNBC TV 18 family, but the day will belong to the Bulls or the Bears.
Happy birthday, Anisha, to all of us, viewers as well as the guests. Now, talking about the market cues that are stacked up, RBI monetary policy clearly will be hogging the limelight for major part of the trading session today. Also, keep an eye on Bank Nifty. Remember, as per the RBI policy expectations, we are expecting a status quo to be maintained by the governor. On the other hand, remember, talking about the yesterday's trade, we saw a sharp rebound in the last hour of the trade from the 100-day moving average. We saw the Nifty rebounding from this 10,069 levels, which is also closer to the 100-day moving average, and this was clearly led by the Bank Nifty. On the other hand, talking about the institutional activity, remember in the cash market, we followed the pattern of FII net sell of close to 1,450 crores. Meanwhile, DII bought in close to 1,000 crores to support that. On a net basis, 450 crores is what the net selling has been in the cash market by the institutions. Talking about the levels, remember there is a clear support seen at the 100-day moving average of close to 10,067, and that will be one of the key levels that we'll be watching. On the upside, resistance is clearly seen at the 10,150 levels, because for a simple reason that 10,100 call over there, we have seen a maximum writing happening yesterday, and on the other hand, the premium stands at around 170 rupees. Global cues for more or less lackluster. If you see the European indices, they ended more or less flattish. On the other hand, Dow Jones, they ended with a cut of close to 0.5%. On the other hand, SGX Nifty also indicates a cut and a closing around the 10,120 mark. Back to you.
All right, Naveen, 10,120 for the SGX Nifty, but 18 years. You've been watching CNBC TV 18 for before you were 18 yourself. What are the stocks that we need to watch out for?
I remember Mangalam 15 to be precise, that is when I started watching. So yeah, talking about stocks, remember there are a lot of these numbers which are trickling down late in the late session itself. So you have a Dish TV which posted lackluster set of numbers. Their operating margins, they have plummeted by close to 600 basis points at around 30%. Losses have also come in at 17 crore versus a profit on a year-on-year basis of 70 crore. On the other hand, Lux Industries, the stock has run up a lot in the last 3 to 4 months, but if you see the revenues over there, down by 15%. In fact, the EBITDA is also down 16%. Expect a red on that stock. Bike Hospitality, lackluster numbers continue for what, 4th to 5th quarter. Revenues over here are down by 45%, but EBITDA down only 6%. On the other hand, Plastibens also weak set of numbers. EBITDA down 34% for this company. Margin pressure is seen continuing. On the other hand, I'll be keeping a keen eye on these insurance stocks today. IRDA has finally will be looking into investment of private equity funds as a promoter or maybe as an SPV in these insurance companies. So keenly keep an eye on that, on these stocks. On the other hand, Bharat Financial also some bit of a breather. So RBI has removed Bharat Financial inclusion from the FII purchase caution list. Keep an eye on Bharat Financials. On the other hand, Amtech Auto, remember they are finally managed to get some around 100 crore rupees from ECL Finance, which is a subsidiary of Edelweiss. Some ratings that have come in. Reliance Communication, Fitch Ratings have withdrawn their ratings for the company. On the other hand, Escorts, an upgrade seen for their debt rating. A+ is what the company has got from A1+. Back to you.
Okay, Naveen, thank you so much for that. We will keep an eye out on all those stocks, but also keep an eye out on the status update coming on the cyclone Oki. After wreaking havoc along in the Tamil Nadu and Kerala regions, Cyclone Oki arrives in Surat. The cyclone made its way to Suvali village near the Hazira district earlier this morning. The storm has put a dampener on preparations for the upcoming elections. Prime Minister Modi has cancelled his rally in Surat, while the Congress Vice President Rahul Gandhi has cancelled all his Gujarat rallies. All fishermen have been advised not to venture into the sea along and off South Gujarat and North Maharashtra coast. 39 people have died and 167 fishermen were missing after the cyclone hit Tamil Nadu and Kerala coast, while 809 others were swept away to Maharashtra as stated by the Home Ministry.
All right, our heart does go out to all the victims of the cyclone Oki. But now the government has released the midterm review of the foreign trade policy. The focus has been on the policy measures to boost exports of the goods and services and to increase employment generation. It was to be announced on 1st of July together with the implementation of the GST, but it was postponed to take feedback from the export sector regarding GST related issues. So let's listen in to what the Commerce Minister Suresh Prabhu and the Finance Secretary Hasmukh Adhia had to say after announcing the foreign trade policy.
This is a clearly well laid out strategy document and also not a one-off event in which now once in a few years we have done it and now we'll forget about it. We'll be on a regular ongoing basis revisiting the issues, identifying the challenges, and we'll actually address those on a real-time basis.
कॉमर्स मिनिस्ट्री ये कह रही है कि लेबर इंटेंसिव जितने भी सेक्टर है उन सब में 2% MEIS को जो अभी जो एग्जिस्टिंग रेट है जो भी उसका उसमें 2% का बढ़ावा किया जाएगा. दिस इज एन एक्स्ट्रा मॉनेटरी बेनिफिट ऑफ 8,500 crore which is going to the exporters.
Okay, let's take a look at the Asian screens. The Hang Seng has opened and that one was holding just mildly in the green, just flat, just 0.09% higher. But the rest of the Asia is still in the red. In fact, Nikkei has extended the losses. It is down now around 0.8% as we speak. And even the Shanghai opened a bit weak, down about 0.6%. The SGX Nifty for starters is showing a downtick of around 11-12 points. But the big Q rally for today is the Reserve Bank's monetary policy. The 6-member committee kicked off their discussions yesterday, but the street is not expecting any action. A CNBC TV 18 poll showed that 100% of respondents expect the central bank to hold the repo rate. Lata Venkatesh is now joining us with her expectations on the policy and what we must watch out for from the MPC meet today. Lata, good morning. Over to you.
Well, the consensus, as Ritu's poll indicated, is that there will be no cut. Then what are we watching for? See, there is the GDP number, which last quarter the RBI placed at 6.7%. Now, if you take 5.7 plus 6.3, which is for H1 and H2, then unless you do 7.25 and 7.25 in Q3 and Q4, you won't get to 6.7. So the markets will want to watch whether RBI lowers that. If they do, it will be taken as a dovish sign, but they might well postpone it to the last quarter. The other thing, of course, will be the statement of, how hawkish they want to be or how dovish they want to be. The point is, everyone is, the consensus expectation, and again, as Ritu's poll indicated, is there is no cut and there is no cut even in the foreseeable future. So what the market will want to know is how long is the pause? Is it a long pause, a year-long pause types, or is it that, they might, they are on the edge and they are looking for signals that will push up inflation? What do they say if somebody were to ask them that crude went to $70 or if the fiscal deficit was 3.5%? What would trigger that, hawkishness on the part of the MPC? These are the cues and clues that one will look for in this statement.
All right. Thank you, Lata, as always, and wish you a very happy birthday as well, being in CNBC TV 18. You said that you are 18.
Absolutely.
18 till I die.
18 till everyone dies.
That's somebody else's
let no one die. It's our birthday. Let's put it that way. But CNBC TV 18 Citizen Monetary Policy Committee also unanimously voted for a pause. Here are the panel members on why they expect a status quo and what they will watch out for in the policy.
The way I would want it worded is that we do have a liquidity problem at the moment. We are in a situation where the yields across the board have gone up very significantly in the last month. And this is a time where we need to focus on liquidity, bring the yields down. Once the 364 day T-bill rate comes below 6%, that's when we can start looking, just even looking, at reduction of policy rates.
At the end of the day, I think the RBI doesn't want to sound too hawkish when the growth is recovering and is just in a nascent stage. And even the recovery in growth, if you look very closely, it's mostly, a matter of being driven by a deflator rather than a broad-based recovery. So in my sense, a neutral tone, but with a little amount of caution on the external front.
While growth is picking up a bit, inflation risks are there, so and there are significant global uncertainties around. So a neutral tone at this juncture should be fine.
This becomes a relatively straightforward meeting for the MPC. It's been a tricky year, but now all the forces are moving in the same direction. Global growth is solid. India's growth is following suit, albeit slowly. Commodity prices are picking up. Core inflation is picking up. Fiscal risks still linger up. All this argues, for policy to behave in one particular way, which is to stay on hold at the moment.
The growth outlook is quite positive. Fortunately, for emerging markets, inflation is still under check. So we are in sort of this Goldilocks zone for emerging markets in terms of capital flows, still continuing, and the pace of monetary policy normalization also being gradual. So in this backdrop, and the world that we are stepping into in 2018 as of now does appear like this Goldilocks kind of a scenario can continue for the foreseeable future.
Okay, time now for a